Welcome to the Rick Helps Real Estate Show. We try to make sense of this crazy Arizona market, and it's not getting any easier, my friends. Hope everybody had a great Father's Day yesterday. I did. A couple of my boys came out, and we barbecued some steaks. I said, come on out, let's kill a cow. So had a good time. And but man, looking at the numbers, let me kind of backtrack just a moment and tell you what my intention is with this channel. I've always said that I'm not going to make long-term projections because if the big guys can't get it right, I'm not going to get it right either. I've also said that it's pretty easy to spot what's going to go on the next quarter and maybe 6 months out, but not all the time. And I've said that until I see numbers that say there's going to be a crash, I'm not going to say there's going to be a crash. There's going to have to be certain things that are going to have to happen. I've never said real estate prices are going to continue to go up forever. I have said that based on data that we're seeing today, that this quarter we're going to see some price increases. And I've been saying that for about a year and a half now, saying, look, based on these numbers, looking at the inventory numbers, we are going to see price increases. And in fact, we did. Well, now that narrative is changing a little bit. Doesn't mean I'm flip-flopping. I'm just sharing with you the numbers that we see. But then there's some components in here where I'm probably going to have way more questions than answer. And I'm going to go through some of that in just a moment. Right now we have 12,500 listings on the market. And if we look at the 7-day moving average, you can see that yellow line I put in there is a trend line showing number of homes under contract is declining. In fact, it's all the way down to 3,100 homes right now. We got 4,981 that came on the market and only 3,197 go under contract. That's a difference here of 1,791 homes, one of the largest gaps we've had in a year and a half. So things are definitely slowing down out there, but that's no surprise to anybody. Listings under contract. Right here, you can see that that's, of course, going down. It's going down in a time when we're normally going up. But then there's another, and there's our inventory. We're going up at about 1,000 a week. At that rate, 1,000 a week, 10 weeks, that's 10,000. We're at 11,000, 12,000 now. We'll be at 22 in 10 weeks, maybe. And that's what I want to talk about a little bit today. And I don't want to talk about that yet, but our listing success rate is declining. There's a lot of homes falling out of escrow, probably due to people not qualifying now because of their interest rate hike and or problems with appraisals. So it's an interesting market out there. But there is a fear. We kind of travel in packs and have this mentality. And there's a fear that real estate prices are going to go down. And when that happens, people run out and hurry up and put their house on the market. But there's some different components to it this year that I dug into over the weekend. And that is that, we've had all these investor purchases over the past year that were about 30%, large Wall Street institutions over the past 2 years. Because the availability of easy money from the Fed just made it really easy for these Wall Street firms to bundle their money together and go out there and outbid you with cash purchases. So the average buyer that wanted to get into an entry-level home just couldn't do it. They just got beat out. And now they hold those properties. And they're probably going to hold them for a long time. And the problem is, and I saw a commentator over the weekend, and I agree with him, he said, those investors are hanging on these rental properties. They're just going to maintain them. They're not going to improve them. If you bought them, you'd be getting new kitchen countertops. You're going to work on the yard, build a backyard barbecue. You're going to improve the house. People that own them as rentals are just going to maintain them. So now we have 12,500 homes on the market. And Jackie and I did a search and discovered that there are 6,249 homes that are vacant. And what that means is they're either homes that are under construction, like spec homes, or they're owned by like OfferPad and Open Door, it's saying I have not receiving enough video to maintain a smooth. Some viewers may experience buffering. We'll see what happens. You never know. I'm going to close out a couple things here just to make sure that I'm not making it too wild out there and too hard for YouTube. So anyway, these vacant homes, then I just did single-family homes. Single-family homes, we're down to about 5,200 single-family homes. Now this number I'm going to show you is everything. It's single-family homes. It's, trailers, condos, townhomes. But out of these, I'm going to get rid of my mug here. Where is it? There, I'm gone. 300 spec homes at least. In other words, the builders are putting their homes on the MLS now. So the homes that are just about done, they're putting them on the MLS. We have a minimum of 300 that I found yesterday. 1,079 iBuyers. That's just between Open Door and OfferPad. They're selling about 1,100 homes. Now, they've always been doing that, but they're in this count right now that out of all those vacant listings, there's about 1,100 of them that are these iBuyers just moving their inventory. And there's probably a pipeline behind us of those same guys fixing up the homes, getting ready to sell them. So they're buying homes, holding them, fixing them up a little bit, trying to sell them for a profit. And they may escalate that as fast as their little legs can carry them because we're not looking at future price appreciation like we had. And I got here 150 plus investors. And I think there's more than that. We're probably up to about another 300, which are just the investors that say, I want to take a profit now. It's time to take a profit on the homes that I purchased. Barler, how easy is it for a seller to back out of a contract once through the inspection period? Once you're through the inspection period, the only thing that's going to get you out of that contract is if you can't obtain financing. And you have to be truthful about whether or not you can obtain financing or not. You can't just say, well, I can't get it. So you'll lose your earnest money. There's a financing contingency in the contract. That's why that inspection period is very important to watch the 10 days that you have. Now, let's say the house doesn't appraise. And even if it doesn't appraise, for $5,000 of value, you can back out. So that's part of the financing contingency. I highlighted some stuff here in the Cromford report that I want to show you. And we're talking about fear of the market going down can become a self-fulfilling prophecy. If there's a stampede, injuries occur. An orderly exit is almost impossible to engineer. So he's talking about the fact that, people get a little nervous and want to put their homes on the market. So human nature makes everyone want to do the same thing at the same time. What started as an orderly cool down in March quickly turned into a flight to safety in April and May, and now we seem to have a stampede for the exits developing in June. The rise in interest rates was a signal for this to happen. It's not only the only cause because supply has stayed low. It could have coped with a significant fall in demand, but it's not just lower demand we're facing, but far higher supply because of the rush of homeowners wanting to exit the market. Now, when he says rush of homeowners, it doesn't look like it's, mom and pa homeowner. It looks to me like it's investors driving this exit. Smack says, I looked at moving to similar home I'm currently in now, and just to get to where I am now paying, be $700 more. Yep. iBuyers and so on. Tomorrow's news will be existing home sales. Wednesday, MBA applications. Friday, new home sales. Very interesting week in housing coming up. Yeah, it's going to be very interesting. And here, of course, if you want to live in your home as an owner or primary residence, you're probably not going to join the stampede. But a lot of people have been tempted to buy a second or third home. We saw a lot of that going on. And the thought of them appreciating, selling one or two of them right now makes perfect sense. A lot of people have become private landlords and have a collection of rentals. Selling the ones that they least like might make perfect sense. A lot of people started operating short-term rentals, and their houses turned into a business, effectively becoming small hotels. This has driven up values and reduced the stock of ordinary homes. The biggest impact could be from those small real estate owners, investors, but from the bigger players, large-scale institutional buyers of homes to rent such as, and you've heard of these people, Invitation Homes, Progress Residential, Roofstock, American Homes for Rent, etc., have gobbled up a lot of ordinary affordable homes across Greater Phoenix, especially in the last 15 months. If these players decided to stop buying, it would create another big hole in demand. Just as demand is already sinking. We're at 3,100 homes under contract in 7 days. That's pretty low. The amplification of the downtrend could be disruptive in ways we have never witnessed before. That's interesting. I just heard today that one of the big players has canceled the purchases they have in escrow, forfeiting their earnest money in order to not complete their purchases. This is ominous. Once again, and this is what drives me crazy about these iBuyers. Like, when the seas get rough, they just cancel. So if you're dealing with an iBuyer, get a large earnest money. When Zillow was out purchasing homes, their earnest money was $1,000. Now, in some of the deals, they sweetened it up and said, well, okay, we'll make it 5, we'll make it 10. We want to get out of the contract. But they'll flick you off the desk as fast as they can. I see help wanted signs everywhere. That's been out there for a long time. We just can't seem to get any help, no matter what the industry is. But these iBuyers, getting back to that, they purchase, they put you under contract, you're getting ready to move, and as soon as they see that they might not get their profit margin, they're out. And they're out quickly. Now, OfferPad and Open Door have not done that yet. I also wonder what their long game plan is if prices go flat, will they change their model? Will they become another kind of a business? And if these investors over time this year are unloading the inventory and bidding wars slow down and stop, how high will inventory really be? Because if you don't want to list your home because you've got a mortgage under 4%, is inventory going to continue to creep up at 1,000 units a week? It is now because, as I showed you, we have, 5,000, over 5,000 single family homes that are owned either by builders, investors, or iBuyers. Somewhere around that ballpark. They're all vacant. Not all of them. So out of that 5,000, what did I come up with? About 3,000 are in that other category. So what if that slows down? Will inventory no longer climb at 1,000 homes a week? So that's what I meant when I said I have more questions than answers. Because if it does climb 1,000 a week, then by summer it's going to be a whole new ball game. It'll be closer to a balanced market, which means I've said yesterday in my video, sellers, you're going to need to sharpen your pencils. Arizona has high demand. Not really. We're sitting at 3,100. That's not very high. Ken McElroy backed out of a big money apartment deal lately. Thinks he can get better deals later. Ken's a smart guy. He's got investment properties all over the country. He's no dummy. I'd follow him if you're not following him on YouTube. But remember, he talks more on the investment side. So try not to get wrapped up in the investment side versus home ownership. Because he's talking about return on investment, cap rates. He's not talking about you going out and buying a 3-bedroom, 2-bath home. He's really geared towards investment properties. And he's probably right that he'll have more opportunities later. Why is there a ton of open door listings? There always has been. They've been pretty active in this market for the past 2 years. We were one of the first markets that Open Door got started in. And OfferPad's been the more conservative of the two. But they always have been churning them at about that rate. But right now they're trying to get them unloaded. So I don't see, when I looked at the Open Door listings, I didn't see a lot of price reductions. So they may be starting out at a more reasonable price than what they were a while back. And Keto Man says, can you describe the differences and similarities between iBuyers and investors? The terms seem to be redundant. Yeah, investors are purchasing homes to hold on to as long-term rentals, as a rule. There are flippers, investors that come in and do what Open Door and OfferPad do. Sometimes, in most cases that I've seen, the investors actually do a better job of fixing up the home versus Open Door and OfferPad. They try to do as little as they can. But a lot of the investors found out that if they really make this home the belle to the ball, they'll get a higher return. So, and they'll take a little bit longer to get the home ready. Open Door and OfferPad, they try to turn it quickly. Now they want it turned after 90 days because if you're trying to sell it in less than 90 days, you can't get FHA financing. So Peyton says, iBuyers flip homes, investors sit on homes. It's kind of a mix. Investors do both. A lot of LLCs that you see out there are sitting on the homes waiting for the long-term rental returns. And they could have, unless rent comes skyrocketing down, that can still be a good investment for them. So it remains to be seen at the level of which these things are dumped on the market. Now, if they start putting these homes on the market in mass and it gets attention, gets on the Channel 12 news, then homeowners are going to go, oh, this is looking bad. We got to get out now while the getting's good. That's what we're talking about, of fear in real estate. And social media adds to that. Everybody on Facebook, the keyboard warriors, saying, oh, this is really looking bad. You got to get out. You're an idiot if you hold your home. But people find a reason to call you an idiot on Facebook anyway. I like the posts that say, here's a stick, go. And then people start, that's not a stick, it's a, I love that stuff. But, and even on YouTube, I get beat up a lot. It's kind of interesting. Stephanie says, I learn a lot every show, a regular watcher. Thank you. I learn a lot every time I get in and look at this data. And I really found it interesting to look at the level of institutional listings that we have now. And it just really made me question, just what's inside of this inventory number? What does it mean? Because I keep hearkening back to 53% of current mortgage holders have a note under 4%. I'm sorry, but they're not going anywhere unless they absolutely have to. And then 37% of those people have cash. I mean, they don't have a mortgage at all. What's really disturbing about this market has been, and I don't like government intervention because they never do it right, but it would have been nice for an idea to come up with somehow to make these investors not be able to make it more costly for them to come in and buy 100 homes in Phoenix. Or when Zillow dumped their homes, they sold them in bulk at 200 a time to investors to turn into rentals. And you probably wanted one or two of those homes, one for you to live in. But you couldn't compete because it was all cash. And it's happened across the country. 30% of homes in Texas are owned by big Wall Street institutional investors. And that just shot out the middle class. So, like I say, as much as I don't like government intervention, it's a shame that something wasn't done about that, because now we're paying the price. And they may be hanging on to these for a long time. And we might ever, it's always going to be a struggle for the middle class to try to get into real estate. Just getting on my soapbox there. El Moco Taco. Dead out here in Goodyear. Several homes were listed this weekend and 0 showings. Have to also figure people can't live far out with gas prices where they're at. How do you like ARM with fixed low rate for 10 years for a 30-year loan? Yeah, if you're fixed for 10 years, I'm not worried about that at all. I think that's fine, as long as you're getting a decent rate on it. You don't want the ARMs that killed us in the 2008 collapse, because those set quickly. So they went from really teaser rates of either 1% or interest only up to 7% in 2 years. But everybody was like, 2 years, I'll be able to refinance. You can never refinance to a decent payment when you're paying interest only. You're paying interest only and you go to 4%, that's still a heck of a hit. So really understand, I want you to look at the math. I want you to look at the dollar amount. Don't try to play the interest rate. I want you to look and say, my payment amount is going to be this for 2 years. Then it might end up being this for 2 years. Try to ignore the rate. Just look at the payment. And if you can adjust 2 resets on the payment and you're still going to be okay, then it's probably a good deal for you. If you're looking out in 2 resets and like, ooh, that's bad, don't do it, because you'll end up you'll be upside down. Property ownership limits should be put in place, kind of like monopoly restrictions. I think maybe there would be, instead of limits, just levels of taxation. In other words, if you're coming in and you're trying to buy 200 homes here, there's got to be a level of taxation, and it can be done at the state level, that makes that not as attractive. Or, and I've said this before, probably a year ago, why not give these guys incentive now for no capital gains taxes to sell them to someone that's going to live in them? As long as you're trying to take their profits right now, sell them to an end user, no capital gains tax. You don't have to do a 1031 exchange. You're just getting out from underneath it. And maybe that'll give us more inventory. And it'll pull prices down, no doubt, because whenever you have more inventory, you have lower prices. But those are the kind of ideas I wish people start talking about. But usually with government, they try to figure out a way to clamp down and punish you. When will rent go down? I don't know. It started going down a little bit. We've got a lot of projects that are nearing completion, so maybe we'll get some relief. But rent will go down when demand lowers, says Daniel. Correct, but who knows? And going back to the government, I mean, right now the airlines are having problems, and what's their solution? Well, we're going to start fining you if you don't get it right. That's not a fix. That's just slapping somebody, and that's what worries me about them getting involved in housing. Instead of saying, let's go down this path with taxation to make it an incentive for you, just going to figure out a way to fine you. And whenever you fine people, they figure out another way to get around it and get more money out of it. So difficult to predict when people are willing to pay in the future. That tends to work itself out just with supply and demand, and when you reach affordability. But we're almost at the point now where families are going to start living together, and I'm glad I live just with my dog. I could probably live with my brother for a couple of weeks. I've done that before. It's pretty cool. We get along great. Don't get me started on my sister. Something would be better than nothing, just something keeping investors from manipulating the market. Yeah, that ship has sailed, though. That's going to be tough to watch. I think really looking forward now at the current rate, this is going to be a very interesting summer. Are we going to have this herd mentality where people are going to feel the need that they got to hurry up and list their homes? Or are we going to quietly just watch the investors start to unload their properties? How high will inventory get? My gut tells me that it's going to climb through July, but then we might kind of start seeing it level off a little bit. But that's how, those are the numbers we're going to have to look at if we think we're going to figure out what's going on by October and November. It all depends on what our inventory looks like in the middle of August. And Terry says, no capital gain if an iBuyer sells to an owner-occupant may solve the problems. I agree with you. I mean, that'd be great for them because, the iBuyers, they're barely making margin now anyway. They're losing tons of money, although Open Door did make money last quarter, finally. So did OfferPad. But if they need to move them without any capital gains, they've probably, they haven't been buying them with 1031 exchanges. But if they moved them without any capital gains and got out from underneath them, I think that would give us a lot more inventory. Having said that, though, the iBuyers are not hanging on to the home. So we need that incentive, that tax incentive, to be for the big corporate investors, to buy and hold people. iBuyers have every intention of buying them and moving them as quick as they can. What you will see, I think, soon, the offers are going to be lower and the fees are going to be higher. They've got to figure out a way to make some coin here. Government will start handing out UBI through the central bank digital currency. Don't get me started. I would say no capital gains sold to a first-time home buyer. I'd say no capital gains if it's sold to anybody that's going to be an owner-occupant. Let's just get to the chase here. That's not raising a lot of revenue for them anyway, so why not give that a shot? But, they're not taking my calls. So maybe I'll just send them an email or something. Hope everybody has a great Monday. For some of you, this is a holiday. I don't have any financial information or mortgage information to share with you today because the markets are closed. And Rick is getting popular and skipping our questions. Gosh, I hope not. Did you have a question there? Yes, there it is. See how fast they scroll by? I apologize. Which one is better, lower house prices with high property tax or higher house prices with a lower property tax? Depends on the state. Arizona doesn't ding you that bad, so I would say higher prices with lower tax rate. Go to Illinois, it's the opposite. Texas, you got to be very careful. Their taxes change by county. And I was looking for a home in Texas once. I thought I was going to be relocating there. Glad I didn't. But I couldn't believe the difference between this community and the community 3 miles away. So I hope that answers your question. I apologize. I don't mean to skip anybody. I've got my screen in front of me here, and then I have the screen over here, and then I got the chat going right there, and sometimes I just go, what did I miss? I'm writing solo here. So anyway, back to having a great Monday. Talk to everybody soon. Have a great week. See ya.